Right now, as you watch this video, the biggest IPO in American history just happened. SpaceX, the company building humanity's path to Mars, is now publicly traded. And here's the thing nobody's talking about. Most people who want to own SpaceX stock have no idea how to actually do it. Some people went to their regular brokerage app, couldn't find it, got confused, gave up, and missed it. But you're watching this video, which means in the next few minutes, you're going to know exactly, step by step, 3 different ways to get exposure to SpaceX right now. One of them costs less than $50. One of them is something 99% of retail investors have never even heard of. And one of them is the strategy that patient, long-term investors are using to build positions that could compound for the next decade. Stay with me. Every single second of this video matters. Before we get into how to buy SpaceX stock, you need to understand why this IPO is fundamentally different from everything that came before it. Because if you treat SpaceX like a normal stock, you are going to make a very expensive mistake. Here's the picture. SpaceX priced its IPO at $135 per share. That values the company at approximately $350 billion on day one of public trading. For context, Amazon was worth $438 million when it went public in 1997. Google was worth $23 billion when it went public in 2004. Tesla was worth $2 billion when it went public in 2010. SpaceX hit the market already as one of the most valuable companies on Earth. Now here's the critical thing to understand about the structure of this IPO. 2 major index rule changes happened around the SpaceX IPO. The Nasdaq 100 changed its rules specifically to allow SpaceX into the index after just 15 days of trading. The Russell 1000 changed its rules to add SpaceX after just 5 days. What does that mean for you? It means hundreds of billions of dollars in passive index funds. The money that just automatically buys whatever is in the index is now forced to buy SpaceX stock. Every 401k, every index ETF. Every passive investor in America, they own SpaceX now, whether they know it or not. That is why this is different. That is why the demand story here is unlike anything we have seen. But now the real question, how do you as an individual investor get in? And how do you do it in a way that's smart, not emotional? Let's get into the 3 ways. 3 very different approaches. 3 different types of investors. Way number 1 is for the investor who wants direct SpaceX stock actual shares and is willing to go through a specific process to get it. Way number 2 is for the investor who wants SpaceX exposure starting today with as little as $50, without opening a new account, without going through any IPO process. Way number 3 is for the long-term investor who understands that the real wealth from SpaceX will be made not in the first week, but over the next 10 years. And yes, before we get into each one, I want to be completely honest with you. All 3 of these ways are halal compliant. No interest-based products, no options, no leverage, no margin. Pure equity ownership or equity-backed exposure. Real investing, real ownership. No tricks. Let's go. Way number 1. Direct SpaceX stock. Now, SpaceX trades under the ticker symbol SPCE. Wait. No, that's actually Virgin Galactic, a completely different company that a lot of people confuse with SpaceX. SpaceX, the real one, Elon Musk's company, officially trades under the ticker SPACX. Write that down, SPAC, SPACX. If you type the wrong ticker, you are buying the wrong company. And unfortunately, many retail investors make exactly this mistake. 5 brokerages received official IPO allocations. Here they are. Number 1, Fidelity. Number 2, Schwab. Number 3, Robinhood. Number 4, SoFi. Number 5, E-Trade. Now, here's the important distinction. Not all 5 are equal for the average investor. Schwab requires you to be a private client, which typically means high account minimums. Most regular investors will not qualify. Robinhood had the most retail interest, which means the most competition for shares. Your odds of getting IPO-priced allocation are lower. Fidelity recently dropped their requirement from $500,000 in assets down to just $2,000. Yes, $2,000. That is a massive rule change that most people missed. SoFi and E-Trade are also options. SoFi is particularly friendly for newer investors. Step 1. Open a regular individual investment account at Fidelity. Not an IRA, not a 401k. A standard taxable brokerage account. Step 2. Fund the account. At minimum, $2,000. If you want more shares, fund more. Use a wire transfer for speed. ACH transfers can take too long. Step 3. Search for IPO in the Fidelity search bar. Navigate to IPO calendar. Step 4. Find SpaceX officially listed as Space Exploration Technologies Corp. Step 5. Submit an indication of interest. This is not a guaranteed purchase. It tells Fidelity how many shares you want. Step 6. Wait for allocation on pricing day. You may receive all you requested, some or none. Step 7. If allocated, shares appear in your account and begin trading. Some brokerages penalize you if you sell IPO shares in the first 2 weeks. Not criminally, but they may restrict you from future IPOs. If your goal is long-term ownership, this doesn't affect you at all. If your goal is to flip the stock on day one, that is a trading strategy, not an investing strategy. And at a $350 billion valuation, be careful. The hype is real, but so is the risk. If you're watching this after the IPO is already priced and shares have started trading, SPACX is now available on every major brokerage, just like any other stock. You open your app, search SPACX, buy shares. The IPO price was $135. Whatever price it's trading at now, that is your entry price. And whether that's $140, $200, or $300, the long-term thesis does not change. Way number 2. And this is the one that most retail investors have never thought about. You do not have to buy SPACX directly to have exposure to SpaceX. There are ETFs, exchange-traded funds, that hold SpaceX shares as part of their portfolio. And here's why this matters. 1. Some of these ETFs held SpaceX even before it went public through pre-IPO private market positions. 2. You can buy fractional shares of these ETFs starting at literally $1 on some platforms. 3. They give you SpaceX exposure and diversification at the same time. XOVR, operated by Shares, had reported SpaceX exposure as of early 2026. This was one of the funds holding SpaceX private shares before the IPO. ARK's space-focused fund. This is the Cathie Wood Space ETF. It holds companies across the space economy, satellite operators, rocket companies, space tech. Important note: always verify the current holdings of any ETF before buying. Fund compositions change. Go to the ETF's official page and look at the holdings section. Confirm SpaceX is in there. Here's the one that blows people's minds. The S&P 500 requires companies to be profitable for inclusion. SpaceX is not yet consistently profitable. However, it may qualify for Nasdaq-related indices, as previously mentioned. This is evolving. Watch this space. This is important. Not all ETFs are halal compliant. If halal investing matters to you, and for many of our viewers it does, here is how to screen an ETF. Step 1. Look at the full holdings list. Step 2. Remove any holdings that include alcohol, gambling, conventional banking, interest-based, weapons manufacturing, adult entertainment, and pork-related industries. Step 3. Check the debt-to-equity ratio of each holding. Companies with more than 33% of total assets in interest-bearing debt are generally considered non-halal by most Islamic finance scholars. Step 4. Look for ETFs that have received halal certification from recognized bodies. HLAL, the Wahed Dow Jones Islamic World ETF, is one example of a screened fund. Now, halal, as of the time of this writing, does not specifically hold SpaceX as a primary position, but as SpaceX becomes more established and screened funds update, this could change. The bottom line on ETFs: they give you diversification, they lower your per-share cost, they allow you to start small, and several of them give you genuine SpaceX exposure. For someone who cannot afford 100 or 200 shares of direct SPACs, which at $135 plus per share adds up fast, the ETF route is not a consolation prize. It is a legitimate, intelligent strategy used by professional fund managers worldwide. Way number 3. And I want to be honest with you, this is the one I believe in the most. Not because the other two are wrong, but because this one has actually made more millionaires in the stock market than any other strategy in history. It is called dollar cost averaging, DCA. Here is the concept. Instead of putting all your money into SpaceX at once, which means you're betting on one price point being the right entry, you split your investment over time every month, or every 2 weeks, or every week, whatever fits your cash flow. You buy a fixed dollar amount of SPACX or a SpaceX ETF, automatically, consistently, without emotion. When the price goes up, your existing shares are worth more. When the price goes down, your new purchase buys more shares at a discount. Over time, your average cost per share smooths out. And if SpaceX's underlying business grows as many analysts expect, your patience compounds. Because, and I am going to say this clearly, SpaceX at its IPO price is not cheap. A $350 billion valuation on a company doing $18 billion in annual revenue, that is approximately 19 times revenue. For comparison, Amazon trades at roughly 3.7 times revenue. Google trades at roughly 10 times revenue. Is SpaceX worth a premium? Absolutely. The Starlink satellite internet business alone is growing at a massive rate. The Falcon 9 is the most reliable rocket in human history. Starship is a technological leap that could eventually transform global logistics.